This is News Talk 980 CKNW.
The Federal Reserve raised interest rates in the U.S. today, but the big question is what's coming next? And meanwhile, Canadians have taken full advantage of record low rates to borrow. And now, no surprise, the biggest debt load in history we're carrying.
Now, some of that borrowing was the result of high pressure tactics from the big banks. Hundreds of current and former bank employees have now come forward to say that they're actually pressured to sell consumers products and services, including higher credit card limits, in order to meet sales quotas. Now, for more on this, we're going to bring in Michael Campbell. He's the host of Canada's top-rated financial show on Saturdays. It's called Money Talks.
So, Mike, let's start with that rate hike today in the States.
Yeah, we talked about that the markets were absolutely saying this was going to get a rate hike here, and that's why it's no surprise their markets were very positive today in light of it. But everybody's wondering what's next. So the Federal Reserve said they haven't changed their mind. They look for 2 more rate hikes this year. By the way, today's rate hike was only the third time in 11 years they've hiked rates. And I think what the markets are saying, they don't really trust the Federal Reserve to follow through because they sure didn't a full year ago. So now it's this. But the reason it's big is, let's face it, we've all borrowed a ton of money in the States and, throughout the world. I mean, the world debt load is just absolutely massive. And they're wondering if this is the beginning of higher rates around the world. I mean, Canada isn't on the verge of raising their rates, at least till for another 6 months to a year, probably more like a year. But still, it signals the end of that big bull market in bonds, for example. So we'll have to wait and see. But you're quite right. They're looking for what comes next.
Let's talk about this continuing story. It seems every single year we're talking about the fact that Canadians are carrying more and more debt. Are we?
Yeah, it looks that way. I mean, I looked at the last quarter. The new numbers came out today. And Canadians in general borrowed $28.4 billion in the fourth quarter. Now, a lot of people say, well, that's our housing market. Well, it is, but that's not the whole story. Mortgages made up about $18.9 billion of that total. But consumer credit, non-mortgage loans, were also $9.5 billion, and that was up. The bottom line is we owe $1.67 for every dollar of disposable income, and that's the number you always hear all the time. But, yeah, the thing that sort of grabbed my eye is, yeah, it's not just mortgage debt. There's certainly clearly a lot of other debt going on.
It's a ridiculous amount of debt. How worried should we be about that?
Well, I think there's a couple of things, and it is important because the number alone doesn't do anything. It's what did we spend the money on? I mean, both of you could go out and spend $1 million, but Linda, let's say you bought a new home or did a business investment, and Drex went out and partied with $1 million. I'll tell you, the impact of that debt isn't the same.
Right, exactly.
Personally, so it's what did we borrow it for? And by the way, that's the same for governments. What are they borrowing for? But I worry about people who have borrowed to support their lifestyle or they're buying depreciating assets. Because, the one positive thing is that our assets, our personal wealth, is growing faster than our debt. That's a good thing. But I'll tell you, if that ever changes, if we start seeing, a decline in the housing market, we certainly had that in Vancouver so far. It's not troublesome yet, but we've seen what a decline looks like. Toronto's the big bright spot as we've got those new numbers today, when it comes to housing. But if we start, borrowing money and seeing the value of our house go down, for example, or other assets, stock market, if we borrowed to be in the stock market, that's when it comes to be a bit worrying. And the final thing is this. Let's keep in mind, removed from our individual, when we talk about the Canadian economy, when you borrow money, you're purchasing stuff today and paying for it tomorrow. So you're moving tomorrow's purchases forward. So it does have a positive impact on short-term economic growth and a negative on longer-term economic growth.
Let's have a chat about this sort of developing scandal. Kind of came out late last week that some sales reps within TD were selling products at all costs to meet sales goals. Now we've got more people from other big banks coming out saying, hey, you know what? We were told to do the same. What's your take on this?
Yeah, well, a pat in the back to CBC. They have a thing called the Go Public Hotline. They've received over 1,000 emails. Let me just read you some of them. This from a Scotiabank financial advisor. He said, management is down your throat all the time. They want to they want you to hit your numbers. It doesn't matter how. This is from an RBC teller. We need to upgrade their Visa card even when customers don't want or need it. Then you got a CIBC teller saying, I'm expected to aggressively sell products, especially Visa, hit those targets. Who cares if it's hurting customers? Finally, BMO financial planner says, if you weren't selling, you weren't worth having around. So as you say, Drex, that started with TD last week, but it certainly has spread to all the banks. Now, at this point, we haven't had a meaningful response from the banks. I mean, we get some sort of boilerplate. We expect our our people to operate with the highest ethical standards. I mean, I'm not sure what else they could say. What's the alternative to
Michael,
that?
I want to jump in here. This stinks just like the Wells Fargo thing did in the States.
100%. That's why it's grabbed quick attention. I'm glad it has. You're absolutely right. I mean, you might remember the Wells Fargo, similar kind of thing, people trying to hit their sales targets, pushing stuff. They did a lot of discretionary down there. We'll see to what extent it's happened in Canada, but they didn't even consult the clients. It resulted in lots of firings, resignation of CEO, bonuses getting clawed back. So, yeah, this one's got a lot to play out, especially, as I say, this wasn't just one person saying something. The CBC's Go Public hotline has received over 1,000 emails from people involved in the industry. I mean, this thing's going to get noticed.
Yeah, well, no wonder the Canadian banks are making such massive profits. But the question is, what happens now?
Well, I'm not sure. I mean, I know we got this. Today we have the Financial Consumer Agency of Canada said in a statement that their office was concerned with reports from the bank employees, pushing forward and sometimes signing up customers for products without their express consent, nada. But, in order to meet the sales targets. But now they're going to do an investigation, But I'm still not convinced a lot will happen here. I mean, there's a lot of calls right now for a parliamentary investigation into this. But I'm not sure what gets the public's attention anymore. I mean, if these allegations are proven correct, and certainly, come on, they got a lot of validity given how many employees, past and present, have been willing to come forward. Well, it's a massive breach of trust, especially given the banks have this protected position, remember, from foreign competition in Canada. So this is a really serious affair, and I hope that we do go forward and we have a long look at this one.
All right, Michael Campbell and Money Talks back on your radio Saturday morning right here on News Talk 980 CKNW. Mike, until next week, thank you.
Appreciate it.
Vancouver's News, Vancouver's Talk. This is News Talk 980 CKNW.